Hello, and welcome to the Life and Finances Together podcast. We want to thank our audience members who have liked and subscribed and encourage you to make that click today if you haven't already. We are thrilled today to welcome back the uniquely brilliant Boer insurance twins who will be talking with Roger about umbrella insurance coverage. There's a lot to know and we want to hear it all, so let's get started. Gentlemen?
The brilliant, did you say brilliant? I mean, I can't disagree. I'd have to say, we're back here with the Boer twins, right? And we're going to be enlightened here today by the brilliant, and I might say, probably better looking than me, the Boer twins. So welcome back, guys.
Intro. Maybe not back in your day, though, Roger.
I don't know, man. I mean, you're supposed to say, no, I'm good looking right now. You messed that. You already messed that up.
I want to keep some sort of truth going on here.
You know what? I'm going to tell you another thing. I can't believe that we're sitting here right now because when this is being recorded, it's the first Michigan State basketball game in the evening tonight. So we'll see if we remain friends after this, and we'll see if we bring them back on. I'm not quite sure. We'll see how everything goes. But as a point of reference, too, USA Hockey lost last night, too. So this is when this is being recorded. So hopefully Chelsea will leave this in and, people will get a perspective. But so there's a lot of things going on in the insurance industry, right? I mean, one of the things we wanted to jump into that we're getting a lot of questions on right now, and I think there's a lot of misconception on it, is this thing as it relates to deed protection, right? So this title fraud.
Sure.
And people think that, hey, your homeowner's insurance is going to cover you. And that I even called you on this to say, hey, is there anything that I can do? Right? And especially dangerous in certain situations. So tell us a little bit about that. What is that? Have you seen that before, the misconception with a lot of people?
Yeah, and there are a few things that you can do. I'm sure we'll discuss that in a few moments, but the misconception on the home insurance side of things is the idea that there's theft, which is generally covered by a home insurance policy. But in order for there to be a claim, there has to be what's called direct physical loss, meaning there's actual damage to the home itself. So what happened probably 5 or 10 years ago very regularly when copper prices were very high was people would break into the house, rip out the copper plumbing, and sell it. That's theft. That's covered by a home insurance
your catalytic
policy.
converter these days.
And
right.
You see that on the auto insurance side of things now. But so
people are ripping off catalytic converters.
Oh, they
and stuff?
love to do that.
Oh,
you leave your car at a car park, and then you come back from vacation, fire it up. You're going to know
loud.
somebody got under that car. Yeah.
But you get an extra 10 horsepower, so
As you do? I'm taking mine off. I'm going to go out there and do my car
You don't need any
now.
more horsepower, Roger. So anyway, there's this big misconception that, hey, my home insurance is going to cover the theft, quote unquote, of my home, when realistically it was just a forgery of the deed. What's happening is these scam artists are basically stealing as much information as they can from somebody. They're generally finding it on the dark web, and then they're going and pretending to be that person and transferring that person's deed into their own name, and now they look like the legal owner of the home, and they can go and take a mortgage out on it. They could maybe sell it to somebody else. They can basically trade that deed for a bunch of cash and disappear afterwards.
I mean, able to reverse that at all? I mean, once it's done, and they're gone. They've got the cash, probably, right?
That's the problem. Once they get that cash, you're never going to find them again. It's like that person that you quote unquote sold your couch to on Craigslist that you wired money to, and then all of a sudden that phone number never works anymore, and they're gone. So
well, then what's the idea of title insurance? I mean, that's a big misconception then,
Sure, right.
What
When you
does.
buy a new home, right, there's going to be title insurance involved with that.
Yeah.
What that's doing is taking kind of a snapshot as of the time that home purchase is closing to show that there's no title issues with that home when you buy it. But once you've closed on the home, that title insurance doesn't do anything going forward, right? So yes, there was nothing impacting that title or the deed when you closed on that home initially buying it. But going down the road, that title insurance does nothing for you. It's just a snapshot type of look to say that if something were to be found back before the purchase of your home, that's where the insurance is being provided via that title insurance. So it doesn't do anything to protect you after the purchase if something were to happen after that purchase date.
Some of the things that we've told clients to do this has kind of come about really in the last 3 to 6 months with a lot of this misconception. So we've been telling clients, well, maybe you take out a home equity line, or you've got a mortgage on the house. Sure. You keep the property in the name of your trust and not just your individual name. And I imagine you probably have to have the trust documents in order to take out a loan and that kind of stuff.
Right.
You buy LifeLock. or gosh, with Allstate is the one that I actually have, right? And then you can also get notifications from the county. I mean, have you guys heard that stuff? We've
have.
told them to do that. Those are different levels of difficulty or complexity to complete, right?
For sure. But all are valid.
Yeah.
And I think that you need to be most concerned if you own your home outright, no
Yeah.
mortgage involved, no
Yeah.
financing, and it's deeded in your name personally. Maybe just you as an individual, not with your spouse as well.
Yeah.
I think that's when you want to take some of these precautions, because you would be an easier target than someone where it's deeded to their trust and a mortgage involved and all these other hoops that don't necessarily prevent it from happening, but it makes it more challenging. So your suggestion about registering with your local county deed office, I know that there are some jurisdictions that do not do that, but if they do, that's a great way to go. They will notify you if there's attempting to be a change in that deed, which is great protection, because as long as you're told about it, you can nullify that and say, no way, something funny is going on here.
I mean, that's scary. I'll tell you what. Now, you look at the other part of homeowners insurance also. Is there identity theft offered like on the homeowners policies? Can people get that?
Yeah, a lot of home insurance policies will have an automatically included amount of identity theft expense coverage. In other cases, you have to add it on as an endorsement. It's generally going to be somewhere in the ballpark of $25,000 of coverage, and that's just for the fees and the time associated with restoring your identity, getting your credit back in good shape, in some cases filing certain legal documents. So I would imagine that if your deed was indeed stolen,
Very good.
and forged a signature and put in someone else's name, that coverage would help you get that straightened out. But boy, that's a lot of hoopla and stuff going on there. So
I mean, do you recommend that somebody put that on? I'd imagine that's something you have to add to the homeowner's insurance policy.
You do.
Right?
You'll find it on most home insurance policies these days. Yeah, rarely gets used. You'll have somebody who maybe gets some funny activity on a credit card, or this is happening. Most of the time that gets cleaned up without it really becoming a nightmare. But we have had some clients who have gone through the full disaster of someone has your identity, right?
Yeah.
Bad things are happening, filing fraudulent tax returns, opening new credit cards. That's a real mess. And identity theft coverage will step in. It's really kind of a prepaid contract with some of the professional providers that will help walk you through what needs to be done. It's still a mess. You're still in bad shape, but at least you're not having your identity stolen and spending thousands of dollars in legal fees trying to get it all cleaned up. So
they'll take you through the process. They'll help you.
They will help you
provide
through the
assistance?
process. Yep.
Okay.
I think another misconception that we see sometimes is it's not doing anything proactively to prevent identity theft, right?
That's
We
key,
make that very, hey, this is a reactive
that's a
coverage.
good
This is
point.
not helping you until you're already in a mess. If you're worried about the proactive type of monitoring and that type of protection, that's where your LifeLock or your other options come into play.
Yeah. And you're not going to need help from any kind of scams and everything either. We've had elderly clients that have been taken for sizable amounts, right? We even had to ramp up our communication to say, look, call us up if you have any questions on these things. But they prey on the senior citizens, right, within the country. And so, but some people thought, well, if I get scammed, hey, my homeowner's insurance will cover me with that. That's not true either, right?
No.
in most cases, no, because what's happening is you're being scammed for money, right?
Yeah.
And you're not being scammed for $20 or $50 in most cases.
Right.
A lot of these
No, it's tens
elderly
of
people are
thousands,
getting a call from someone who sounds like a grandchild that's locked in jail in Mexico, and they need $10,000 to get out and come back to the States, right? Totally made up story, and that scammer is usually using artificial intelligence to make themselves sound like that grandchild. But a home insurance policy provides $250 of coverage for cash, money, securities, financial instruments, right? So was that theft? Yes. $250 is your coverage.
Man.
So yeah, you're going to be very, very disappointed when you report that to your insurance agent.
I mean, that's just, it's sad to see how this stuff is really ramped up, right? And I mean, I have identity theft protection, and then I look at the report that it's got on me, and I'm on the dark web. Now, I have no idea what that means. Did my screen go blank when I was surfing the internet or something on my computer? I don't know what was the dark web. I don't know what that is, man. Right? It sounds bad.
It sounds bad.
Right? I
It
mean,
sounds bad.
so I'm hoping it was just my screen going blank, but it doesn't sound like that's what it is.
Yeah.
So I mean, there's a lot of things. I'm glad you were able to provide some clarity on that, because we do have clients clients that think, well, hey, I was covered and I'm good. I don't think anything's going to take the place of, getting some identity theft protection, right? And I've done that, and they provide all kinds of notifications, to us. I have it set, the funny thing is I have it set to where if there's a transactions larger than $250 on my credit card, then I get like a notification through the system I set up. Well, when my wife and my daughters are gone for the afternoon on a Saturday, that thing's ringing off the hook. So I don't know what to say to that, but still, I'm reassured. I'm reassured, right? Gosh. The other thing that we always have touted and said it's just an unbelievable important part of somebody's financial plan is umbrella insurance, right? And a lot of times people will say, what is that? And you guys provide some pretty good insight on actually who needs it. And I've been doing this for 30 years and getting ready for this podcast. You guys shed some light on some stuff as to who actually needs it. And it's not necessarily the uber rich.
Yeah, no, not by any means. I mean, almost all of us here in West Michigan or even in the country are going to have auto and home insurance, right? And if you look at yourself and you say, okay, am I an average person? Am I earning the median income of 40 grand? And do I have the median net worth of 190,000? Maybe, but a lot of your clients are going to be that, tenfold and then some. If you're beyond what that normal is, you need to have an umbrella policy. Our general advice would be if you're working with an estate planner or you're working with a financial advisor or you're somebody that cares about your financial future, that's enough to say you need to have an umbrella policy, because at some point, hopefully your financial house is in order and you want that umbrella to be there to protect all that hard work you've done.
Yeah, what's incredible is I'm looking at the notes you guys gave us. The median income is $40,000 a year. Median net worth is $200,000 a year. And you said if you're above that, you need an umbrella policy.
Sure.
I got to tell you, we would have been like, I don't think we're going to worry too much about that. But that's really eye-opening, right? Yeah. But along with that comes some additional cost. You guys need to share some of that. You gave us some information. This is incredible what the cost is, what's happened with the cost.
Yeah. Umbrella insurance, historically has been very inexpensive, right?
Yeah.
A couple $100 and bam, you've got $1 million of liability coverage. That's a no-brainer in almost every situation. Still very affordable, right? But you are seeing that the umbrella insurance market has become more challenging, right? It's harder to obtain big-time coverage, talking 5 to 10 million. It's much harder than it was to obtain even a year ago.
Yeah.
And premiums are getting a little bit more expensive. Now, okay, take 22% on $200. Does that really matter? No, not going to change your life. But it's true that it is becoming more challenging and more costly to obtain that umbrella policy, especially if you want to have 3, 4, 5 or more in your millions of coverage.
Well, here's some more notes that you gave me here, too. You can get $10 million of coverage. 5 years ago, $10 million of coverage cost about $500 a year. Today, you can get $5 million in coverage that costs about $1,000 a year. And so, I'm looking down the notes that you gave me, and I'm looking at the saying, well, why is that? And you've got a few things here as to why this cost is going up. And I looked at this thing I was kind of reading it. Nuclear judgment. What the heck is that? That just sounds like scary. Really bad, right?
It is really
bad.
Like
you got 3 smokestacks sitting next to your house and something's going on with one of them. You got to tell us what that is. I have no idea what that is, but it doesn't sound good. I'll tell you.
Yeah, we'll give you one example here, and it's going to depict it pretty well. Historically, one of the biggest liability coverage claims from a home insurance or umbrella insurance perspective would be dog bites.
Oh,
and
wow. Okay.
Generally it's going to be a younger person that gets bit by the dog because they're, at mouth level and they're playing with the dog. They don't necessarily know how to interact with it the way that most adults would. And that dog bite would generally result in something like a $30,000 claim payment on the liability coverage, right? The insurance company would say, okay, there was a puncture wound, there might be some permanent scarring, maybe a little bit of emotional distress. So sorry for that. Here's your 30 grand. And that was kind of the going rate for those dog bites to children. And then all of a sudden someone said, I don't want 30 grand, I want 3 million. And the insurance company said, that seems outrageous. How about we give you 50,000 instead? And that person said, no, I want 3 million. They said, well, how about 100,000? The person said, no, I want 3 million. Went to court, got litigated, they got their $3 million. So all of a sudden that set the new bar when it comes to that type of claim and what it's worth if that party says, I don't want to just settle, I want this thing to go to a courtroom and get litigated. It's almost like in the NFL when you've got that next quarterback that gets that big contract, they reset the market. Whether they were the best quarterback or not, everything has been reset.
What?
Yeah.
I mean, did it have to be like permanent damage?
They're going to project it out, right? That's the brilliance of attorneys like that. They're going to look and say, Roger, your 6-year-old daughter, my goodness, she's beautiful, she's precious, and she probably wanted to be a Disney princess down at Disney. She was going to work at Disney, right? Or she was going to be a movie star. She had dreams to do all of these things.
Oh, man.
And now that she's got might have some facial scarring on her cheekbone here, that's going to have a huge impact on her emotionally, but also her ability to pursue these dreams of hers. And they really build it up. And more power to them. That's their job. They're trying to settle these lawsuits in the best interest they can for their clients. But the court system has swayed that direction, right? It's much more empathetic, much more punitive to the wrongdoer, and that's resulting in these lawsuit values just going through the roof. And insurance companies know it. They have all the data. They're paying it, and that's where they're calling these nuclear judgments. I mean, it's literally called that like you're dropping a nuke. It is just absolutely huge. So that has a huge impact, and that's why they're taking risk off the table a little bit by, number one, charging more for the coverage, but number two, being a little bit more restrictive in terms of how much coverage is able to be put on the table.
So expand on this other thing you talked about. Private equity is investing in lawsuits.
That's a big problem. Are
you guys kidding me right now?
And that's from a few years ago. I'm sure none of your clients would ever have interest in doing this, Raj. But just a few years ago, you could start through private equity firms invest in lawsuits. And so you've got a bunch of most attorneys out there are not charging for their services unless there is an award in that lawsuit claim.
Right.
So there's no risk on the table. Hey, you want to take this and run it up the flagpole, see if it sticks? Well, 1 out of 10 of those might stick, and it might be this huge judgment. So you have funding for all of these legal expenses via private equity, which is, of course, causing more lawsuits to be filed. And then, of course, they're way more aggressive in it because they got to cover the returns that they are, seeking for their investors, which is just really bad for the entire litigation.
So they're throwing $1 million. So going back to what you had said, they're throwing $1 million at this thing, maybe for the expenses, with the idea that, hey, we're going to make $3 million.
It's risk return.
What they're going to do is they're going to give that family of the child that had the dog bite, they're going to give them $1 million and say, you know what, we can guarantee the $1 million. Take this. You don't have to worry about how long this is going to play out in court, what legal fees are going to be incurred, anything else. You can take the cash and be done with it, and we'll just take whatever this whole thing settles for. Well, when it settles for $3 million, they just turned 1 into 3, and that family took their 1 and they were happy. So that's your investment in these lawsuits.
Oh, man.
Because they know all the data. They've got enough, big money and big brains to say, this is worth it, and they'll be the ones that end up collecting.
One of the other things you talked about before, and you kind of gave us a heads up on this, what is it, open and obvious? Was open and obvious defense disallowed? Let's go through that again.
That one hurts specifically here in Michigan, right? That was the Michigan Supreme Court ruling from earlier last year. And that made it much more challenging for building owners and property owners, hotels, anyone who has people coming on their property. Because if Derek leaves this table and trips over one of the cables that are running through here, you could have said in the past, when Derek breaks his arm and files a lawsuit against your firm, hey, that was there. You saw that. It's open and obvious. We're not hiding that, right? That's just a risk that's open and obvious. And that lawsuit would likely be dismissed without ever even being tried. But the Supreme Court ruling says that is no longer dismissible. You can't dismiss that based on that risk being open and obvious. Now that has to be tried. So the open and obvious, you see a lot of business owners and property owners that are putting up tons of new signs and disclosures and all the things saying, hey, slippery when wet. I mean, that's your classic. Hey, careful on our property, because no longer can they, something goes wrong. Yeah, they're going to try to take care of you. Of course they are. But their legal team is also going to try to dismiss that lawsuit via the open and obvious doctrine, which no longer is allowed.
I got to tell you the other thing, too. Now you shed some light on it where you're like, hey, don't eat the detergent packet that looks colorful and swirly. I mean, is that why it's on the? I'm like, in a million years, you're like, I'm not going to eat that. Why would I eat that?
Right.
Well, we got to put that warning on the package. What?
It makes you kind of want to eat it just to see.
I don't even want to tell you what my dad would have told me back in the day if I said, I'm going to eat that. It wouldn't be something we could share on this podcast right now. If I said, I think I'm going to lick that or eat that thing, it would have been bad. Yeah. Hey, one of the other things, too, that everybody has kind of a differing opinion on, let's say you have a net worth that's greater than $5 million, right? And you guys have already kind of said that, hey, you can get $5 million, up to $5 million in umbrella, relatively easy. Sure. What happens if you have a net worth that's 10, 15, 30 million dollars. What do you do? I mean, we've had attorneys that said, hey man, just risk it. Okay, get the 5 mil, you should be good. I don't know if that's a strategy or not, but what do you do? What do you recommend? How do you go about getting coverage when you have that high of a net worth?
It's tough. Yeah, you get what you can, right? You can typically have, you're going to run into the situation where that client has a primary umbrella policy, somewhere between 1 and 5 million, and then now has an excess umbrella policy that puts a certain amount of additional millions on top of that. So you're now stacking 2 separate umbrella policies to try to get as much coverage as you can in place. But it's much harder to obtain than it was a couple of years ago. So you do hear attorneys saying, hey, the vast majority of lawsuits can be settled for $3.5 million or less. So if you can put $5 million on the table, you're worth 15. But what are you going to do that's going to generate a $15 million lawsuit, right? So you've still got risk on the table. We all have risk on the table. And same thing goes if we wipe out a school bus full of kids, who cares how much umbrella coverage I have on the table? It's not going to be enough. That's a risk I've got to take. I can't protect myself from every single risk out there, but you want to protect yourself from the ones that you can stomach and the ones where insurance is obtainable for protecting those risks.
Wow.
So you buy as much as you can, you get what's available. The challenging thing right now, though, is it's changing. We have clients where those policies are renewing. The excess umbrella policy got renewed with an offer of $2 million. Used to be $5 million. By the way, premium's up a bit. And we're only putting $2 million on the table. So it's really a matter of navigating the changing insurance market and trying to find where we can obtain the coverage in the best manner that's possible.
Wow.
And how much risk is on the table, right? I mean, if you're a younger family with teenage drivers, you've got the lake house, you've got the boat, you've got the dog, you've got some dirt bikes, a rental property, you have a lot more exposure than the 85-year-old couple in the condo that really stays to themselves, right? So it's really kind of that risk reward with regard to how much am I willing to pay to have this additional protection.
So, I saw in some of the things that you were preparing us for today's podcast when we were looking at, do a life insurance projection. We've been doing those forever, right? I've been doing this for 30 years. And, you got to calculate what your actual need is, right? Because we believe in getting what you need on insurance and that's it. But you guys said, hey, when you're looking at this, trying to put this, I guess, this value on this life, I never thought that the life insurance calculation, I never thought of it in that way. That I was actually putting a dollar amount on this person's life. We were kind of looking and saying, hey, what does the family need? But it's the same thing. You're really looking at this saying, hey, I'm calculating a dollar amount that they bring to the table, right? Through their whole life up until their families are gone at age 90. So they said, well, they're going to do that calculation. And then I kind of chuckled at it a little bit. And then they're going to tack on, emotional distress, right? And so I was going to tell my wife, I'm like, hey, don't tell them probably the truth and saying, I know emotional distress now. Everything's good. I said, you better go into that courtroom looking sad and bewildered, okay? Because otherwise all you're going to get is that life insurance projection. You know what I mean?
That's right.
So, I mean, that's I saw that on there. I thought, well, I'm going to have to coach my wife when she goes into the courtroom. She's going to
be so relaxed.
Yeah, right. She's like, oh, this is great. Goodness. Okay, wonderful. Yeah, he's gone, right? I don't have to deal with him leaving stuff laying around and all this other stuff. So we joke. It's not funny. I mean, we laugh a little bit about this, but gosh, I mean, it's serious. I mean, bad things can happen, and you got to have that coverage.
It's a great point. When there's an injury, a severe injury, or a death, that lawsuit and the value that's assigned to it is going to be made up of a number of different factors. If it's a younger person, maybe they're a 35-year-old accountant making $100,000 a year, it's going to be the income that family lost out on, assuming that person was going to work till age 60, let's say.
Right.
But in some cases, that person also has some, physical injuries that really inhibit them from living a pleasurable life, right? They might be paralyzed from the waist down. They might be blind in their eyes. They might have these other things that, no, they didn't necessarily have a loss of income that we're calculating, but the quality of their life took a serious decline. And how do you compensate them for that other than giving them some money? You cannot restore their physical abilities. You're going to compensate them with money. So you're going to have lost income, you're going to have pain and suffering, decrease in the quality of their life, you're going to have the emotional distress.
Or increase in your wife's
increase, that one's going to be against you.
That's going to be accounting.
It's tremendous what these things can add up to. So the life insurance aspect of it is going to calculate, what was the financial value of this person's life? That's kind of just a baseline for it. But then gosh, if they're, going to be brain dead or paralyzed, there's a lot of other things that are going to be thrown into that as well.
Absolutely.
Yeah.
So as we kind of get towards the end of this, we want you to give us some examples. I mean, because we get the question, what does the umbrella policy do? When does it kick in, right? I've got homeowners insurance. I've got auto owners insurance, right? So what are some of the examples that you guys been around a while, right? When does this thing kick in? When does it get used? What are the situations?
Yeah.
Interestingly enough, it's not the ones that you would think. The classic example is you kill someone in a car accident.
Yeah.
Somebody slips and falls on your driveway and bangs their head. Those are obviously things that would be covered by the umbrella insurance policy. But what actually happens in real life are things like not a dog bite, but the dog knocked over an elderly lady, right? There's something like the person that was riding the boat, the pilot of the boat hit a wave, and that person landed weird on that seat, and they fractured their spine, and now they're paralyzed, right? It's these instances where, I would never have thought that would generate such a large lawsuit, but that's what happens. So Brian's got a couple examples from actually recent years with some of his clients that you'd be baffled at the size of the lawsuit given what had happened.
Yeah. And most of those are going to be for younger people, right? Younger people generate larger lawsuits because you project income and all these goals and the dreams and everything that they have. But, we ran into one with a contractor falling off a ladder in the backyard. That's a bad day, right? Yeah, you hired the contractor. They're on their own. You just hired them to do the work, but they got hurt on your property. Right? We are a sue-happy society. There's going to be a lawsuit associated with that. You see ones where you pull out in front of a motorcyclist. And thank God there was no impact with your vehicle. They're still alive, but they had to lay down their bike, and they've got bad road rash. They might never ride again because of the emotional distress from that incident, which is fair. That's going to be a big lawsuit, right? There are these things. If something goes wrong, if an attorney gets in their ear and really wants to push it, there's a lot of financial incentive for them to file that lawsuit and see how far that can go. It's concerning.
So when you have a contractor that's on your property, right, there's another question that we get. They're doing some work, and what do you ask? If they're bonded, right? I mean,
licensed, bonded, and insured.
Right. So, I mean, what does that work? Is there a coordination with that? So somebody's on my property, they're up on the ladder.
Yeah.
I don't know, how do you fall off the ladder? Do you know what you're doing? I mean, that's one thing, but I guess that doesn't matter, right?
Yeah.
Does that all get coordinated? How does that all work? So when you're asking that question, because some people say, I'm not going to get the umbrella policy. They're licensed, they're bonded, they're insured. I'm good. Is that true?
So it's a great question. And typically what you'll find is, we should be asking those people, anybody that comes on our property, we should say, hey, I want to see your certificate of insurance. What do you have?
Yeah.
It's going to mean nothing to your average homeowner. Hardly means anything to us. Oh, it's a piece of paper. I see a couple zeros on there. I guess you're good, right? Let's be real. But the reality is, if that contractor gets hurt, they might have workers' compensation coverage in place that's going to pay their medical expenses. But oftentimes, there's still going to be a lawsuit filed against the homeowner. Now, were you negligent? Did you go out there and kick the ladder out from underneath them? No, of course not. But maybe they were reaching over to reach a shingle they're patching, and they put a hand on your gutter. Oh, and there's a rusted screw on your gutter, and with any bit of weight, that gutter fails, and they come tumbling off the ladder, right? If they're the smallest little thing that was a hazard on your property that you probably didn't know about, well, if there can be any neglect that gets pushed back to you as the homeowner, there's some potential liability for those injuries that happened. So it's a concern, certainly, especially if you look at the statistics in the contracting world. A lot of subcontractors and a lot of contractors. There's a lot of confusion on the insurance side of things. Nobody really knows who's covered or what they're covered for. The homeowner wants to rely on their own coverage to be comfortable with what's going on there.
Well, I'm calling you guys. I'm going to call you guys. That's what I'm going to do. Well, you guys have provided a lot of great information, a great outline for what coverages should look like and the different things you need to think about. Some of the things today I never would have thought of. I would never have thought that some of these small little incidences would require a big lawsuit, right? So, I mean, when you're looking at this, and we do this for a living, we've been doing this for 30 years, and we provide recommendations, we provide guidance on what you need to do to not only protect your assets, but you're also going to be protecting your family and what the needs of your family are going to be long term. You really don't want to do this yourself. You want to work with a licensed professional that knows what to look for, is familiar with your situation, and can put you in the right amount of coverage with the right company. It isn't until you do that work that you're truly bringing life and finances together.
Thanks so much for watching, for listening, and for learning about umbrella insurance with us today. For questions about our financial services or finances in general, please check out our website. That's reinveltdavid.com. Send us an email, give us a call, and of course, please like and subscribe to our podcast and stay tuned for our next episode.
This podcast is for entertainment and educational purposes only and is not intended as personal financial advice. Before making any financial decision, please do your own research and consult a financial advisor as needed.